What's up traders? In today's video I am breaking down the exact trade that helped me pass my FundedNext challenge. No fluff, I will show you how I identified the trend, what confirmed my entry, how I managed risk and why this setup is repeatable. So let's jump straight into the chart. So this is the 4-hour chart that is on the screen. Whenever I trade a trend following system, the step number one is always the same. Identify the direction of trend. On the 4-hour time frame, price was clearly making bearish structure. You can see it making lower lows and lower highs and respecting a descending trend line. When price came back to this trend line and tapped it again, it immediately caught my attention. Because every time in the past price reacted from this zone, we got a solid move down. This is where the trade idea started forming. Once the trend is confirmed, I looked for entry catalyst. We look for two things, that the first is liquidity or a fair value gap, but in this time there was no clean fair value gap, so I switched to the next best thing, that is liquidity levels. These two yellow lines that you can see on the chart were very important. They marked clear liquidity spots, areas where stop losses were sitting. Whenever price pushes into liquidity within a trend, it often gives the cleanest entries. So my plan was simple: target the first liquidity line, wait for price to tap into it and place a limit order there. This wasn't a random guess, it was a mechanical reaction to the structure. The price came into the liquidity, reacted exactly how I expected and gave me the entry. We can see a clear wick rejection from this liquidity. What I love about this setup is how clean the narrative was. Trend got confirmed, trend line respected, liquidity engineered, price tapped liquidity, and we saw a clear rejection. This is where I executed. My stop loss was placed safely above the liquidity sweep. I always want my SL in a place where the price reaches, the setup becomes invalid. This gives the setup a very high strike rate and allows tight stop loss even on a higher time frame bias. My risk to reward on this trade was 1:3.4, which is more than enough to pass phase 1. If I am risking around 2.3% on this trade. My target was straightforward. I aim for the next structural low, the logical place where price should go if the trend continues. And that's exactly what happened. Price melted beautifully, hit all take profits, and the trade closed with a perfect 1:3.4 RR. This single high probability trend setup was enough to push my account balance over the passing criteria. So, what is the takeaway for you? Passing a Profirm challenge is not about taking 20 trades a week. It's about taking one or two clean, high confidence setup like this. So, what are the key lessons? So, the first is follow the trend, don't fight it. Second is to use liquidity as a confluence. Third is trust your system, not emotions. Fourth is keep your RR high for Profirm challenges. The expectancy should be positive. Avoid overtrading. One clean setup can pass the entire challenge. If you enjoyed this breakdown and want more funded account strategies, hit the like button, subscribe and drop a comment. I will reply to everyone. Thanks for watching and I will see you in the next trade breakdown. Stay disciplined, stay profitable. Thank you.